What is up, guys? Happy Monday. It is the 24th of October, and this video is just an update on the weekly closes that we've just seen. So the weekly candles on Bitcoin, Ethereum, and maybe we'll look at the stock market too. So I just want to give you an update of how I perceive those closes and levels that I'm looking at for the week ahead that are going to help us make decisions on whether the market is more bullish or more bearish. If you are new to the channel, welcome. Consider subscribing down below. Click the notification bell if you do, because that way you get alerted when I upload a new video. And if you want me to email you every time I upload a video or there's something important to share in the crypto space, click the first link in the description down below, enter your name and email. It's completely free. That way you get on the email list and I can update you whenever there's something important happening or when I upload a new video. Okay, so we're looking at Bitcoin here on the weekly chart. We have the 50 simple moving average and the 200 simple moving average in red, the 50 in blue. We are trading at 19,300 to round it up. And there is basically very little that has been happening in crypto in the last couple of weeks. We are in a very, very tight range. There's almost zero volatility. We're seeing a lot of signals pointing towards a big move. We're approaching low volatility that is likely to end up giving us a big move in a big direction. We've got the Bollinger Bands that are squeezing, that are very tight. So we are setting up for a big move in a certain direction. As you can see, I've got this highlighted, or I've circled this in various places where this has happened in the past. And when we get these several weeks of almost no volatility in a very small range, we tend to get a big move out of that range. And you can see it does differ. So in 2018, we had a similar situation where for several weeks, we went in a very small range, almost no volatility, and then we broke down and had a 50% capitulation. At the bottom of that capitulation range, we went sideways in a very small range, and then we got a big move to the upside. Over here back in 2019, we got several weeks of, again, in a small range, almost no volatility, a nice big squeeze up, and then a move down. And then we got the same thing over here in early 2020 after the March crash here. We got several weeks, again, sideways in a very small range, and then we started a big move up. And you can see we're starting to get a very similar pattern here, where for several weeks we've been in a very small range with almost no volatility. Now the question is going to be, which way are we going to get this move? Because whether we go up or down, a move is coming. I think everybody agrees on that. At some point, we're just going to see a big move that could either be a short squeeze where we run up to the upside, or it can be a breakdown. And if you've been following me for a while, you know that my opinion is still that we are more bearish than we are bullish at this point in time, simply because of how the chart is set up, and combine that with the macro factors. Okay, we've got this on this weekly chart, we're just below important moving averages. We're below the 200 moving average, which is a minimum I want to see reclaimed before getting more bullish, right? So we need to get above 24,000, in my opinion, before we can start thinking that the bottom is potentially in. Until then, there's still this risk of a sell-off. And I think if we do break this support that we've been sitting on, this 19,000, if we do break that, I think there's a decent chance we go to this support over here, somewhere between 10 and 14,000, and that is still completely on the table. But it is possible that a lot of people are betting on this with leverage positions and with options. So it is also possible that the market makers create some sort of squeeze where we see a rally. And even if we go to 21 or 22 or 23,000, that could still be a squeeze that rolls over and ends up lower over here. So in terms of bullishness, like I said, I will probably be one of the first to start making bullish videos if I feel that the charts are showing us that confirmation, and that is going to be a minimum for me of 24,000. I want to see this 200-week moving average reclaimed, and I want to see the 3-day 50 moving average reclaimed too. Okay, those are two things I'm watching. Until then, I do still very much think there's possibility of a breakdown towards this $10,000 to $14,000 level, potentially in the next weeks. Potentially in the next months, we'll have to wait and see, but those are the criteria that I'm looking for. And as long as we're below this 200-week moving average, I think the risk is still to the downside. Either way, we are likely to see a big move based on what has happened in the past. There's almost no volatility, and that move is going to be coming, I think, pretty soon. What we also have coming up in the next 2 to 3 weeks is tomorrow on the 25th of October, we have a partial solar eclipse. Okay, those tend to be big events in the financial space. On the 8th of November, we have both a lunar eclipse and we have the US midterm elections. So starting from pretty much today or tomorrow all the way until after the 8th. So for the next 2 to 3 weeks, I think there's going to be potential for a lot of volatility in these markets, a lot of crazy moves, a lot of potential news that is coming out, a lot of crazy stuff that could happen. So be prepared for this and keep an eye on what is happening. Again, even though I said here 24,000, we need to get back above 20,000 in the very first place to even start thinking about being more bullish. We have not been able to get above that 20,000 or the 20.5 level, 20,500, for quite a few weeks now. And as long as we're below there, I don't think there's any point in calling for bullishness until 25K or 30K or what a lot of these social media influencers are calling for, because it just doesn't look that way at this point. Okay, so if we reclaim $20,500 on the shorter term time frame, so on the daily, on the 4-hourly, if we can get above there and we can manage to stay above there, then I think we have potential to maybe take a run at this 200-week moving average. So we get to 20.5, maybe we go to 24 after that. But as long as we can't even make it past 20.5 or even 20,000, I mean, you can see that basically means there is downside pressure. And it's just a matter of time. We just need a catalyst here to be able to create that sell-off. And I think if it happens, or when it happens, it will end up selling off pretty quickly. So, of course, keep an eye on the lower time frames. I'm doing these updates once a week here in the weekly chart, so the delay between those updates is, of course, bigger. But keep an eye on the lower time frames. Follow me on Twitter, on Instagram. I do regular daily updates there. The links are in the description below. And if you want to find out more, of course, you can join my VIP mentorship and Discord group, second link in the description down below. I also give daily updates in there. Let's head over to Ethereum, which is currently trading at $1,336. As you can see, the same setup, the 50 moving average in blue, the 200 simple moving average in red over here. And the 200 isn't that important or that significant on Ethereum as it is on Bitcoin. It's, if you just go and look at the charts, the historic data around Bitcoin respects that 200-week moving average a lot more than Ethereum does. But it is interesting to note that Ethereum here is sitting right on that 200-week moving average. And if you zoom in on lower time frames, I could argue that this could potentially even be a little bit of a bear flag that is just going to break down lower. So the key levels I'm watching for here, I mean, until we at least even reclaim this level, so 1780, if we don't reclaim that, everything is still bearish in my opinion. We reclaim that, things start to get interesting. If we reclaim this high at $20,040, I would start to consider, you know, maybe the bottom is in, maybe we're in for an extended rally and we can go a bunch higher. Until that happens though, you know, I'm still looking at a retest of the June lows, potentially a little bit lower over here into this fair value gap on the weekly. But if that breaks and we do get some major global sell-off in the next few weeks, which I still very much think is a possibility, we could go as low as somewhere between $300 and $500, which I've been saying for many weeks now. That is still possible on the weekly chart. So again, you know, keep an eye on this. We could get a bit of a short squeeze, even if we do go up to 1400, 1500, 1600. It doesn't really mean much because it would still be a lower high that could roll over and still go to new lows. Okay, so for the bullish scenario, I'm really looking to reclaim at least this high, 1780, if not 2040. If we get above 2040, things start to get a bit more interesting for the bulls. Until then, it could just be a lower high that rolls over lower again. And then real quick, let's take a look at the S&P 500, the SPX, because that is also very important to the direction of Bitcoin. As long as the stock markets, including the SPX, hold up and don't sell off further, maybe there's a chance that we see a bounce in Bitcoin and in crypto. But if the stock markets are going to sell off and we break below the 200-week moving average, same setup, 200 in red, 50 in blue, if we break below this 200-week moving average and we close below it, there is potential for a lot more downside, which would likely also result in a lot more downside in Bitcoin and in crypto. So you can see it's been very well defended the last couple of weeks. It bounced off it. There's been some attempts. There's a wick below it, but we still did not get a close below this. And they've been trying to save this because they know, market makers or whoever's behind this, the central banks, whatever, who's trying to save it, they know that once we start closing below this 200-week moving average, tons of people are watching this. Wall Street are watching this. Retail traders are watching this. Institutions are watching this. We get below that, it creates a bit of a self-fulfilling prophecy where people think it's going to drop a lot more, so they close positions, which causes it to drop more, which hits margin calls, creates margin calls, liquidations, which causes it to sell off even further. So we can get a really quick cascade if we do end up going below this 200-week moving average. You can see over here also that was in March 2020, how quickly it cascaded in a matter of 3 weeks, how much it dropped, right? So we could see a situation like that if we do get below here, and you want to keep an eye on this yourself, set some alerts. If we start going below that, things start to get dangerous. So far we bounced. We had a nice big green week last week, but there is still at this point nothing bullish here. The Federal Reserve has raised interest rates a lot this year. There is a new interest rate decision on November the 2nd. So that's another thing that's happening in these next 2 to 3 weeks. November 2nd, we get the interest rate decision where it's likely to be 75 basis point increase. And then we have to wait and see, are they going to start talking about slowing it down to 50 and 25 basis points in the following hikes or not, and how the market is going to react to that. But again, that is another thing that is happening. So we have the eclipse tomorrow, then we have the FOMC, the interest rate decision on November 2nd. Then on November 8th, we have the lunar eclipse and we have the midterm elections. So it's going to be a crazy next couple of weeks, and we have to see, is this going to hold this 200-week moving average, and can we bounce from here? If it breaks below it, things look pretty bad in the short term. We'll probably go a lot lower on stocks and on Bitcoin and crypto. If we can hold this, we're not in the clear until, in my opinion, we get back above the 50-week moving average, which also means getting above this high. So at this point in time, if we can get above 4,200 again on the S&P, things start to look interesting, and potentially for the bulls, then we could have a run back to these all-time highs or maybe even new highs. But until that happens, we are very much at risk of it just kind of consolidating here or creating another lower high that then rolls over, breaks the 200 and goes a lot lower. So personally, I am leaning towards a breakdown in the next couple of weeks, but I am aware there could also be a short squeeze, or maybe this is somehow the bottom and we do end up going up from here, which I will then update if we do get that bullish confirmation on the charts with various levels and indicators like I've suggested through this video. So set your alerts. Hopefully this helped you be more prepared. If you like it, smash the like button, subscribe, share this with your friends and family. Just copy it, paste it on Facebook, on Telegram, on Twitter, wherever you want to share it. The more people who see it, the more people can be prepared and hopefully make more profits from these markets and avoid losses.